Hi there, traders. This is Brad Goodwin with the FX Market Insight for Friday, the 26th of June. Right now, as we start the early part of the Asian session, not a lot of change, right? There's still sort of weird sort of news coming around, like various geopolitical stuff. The of note, equity markets up 1%. You know what? It's a small little correction, and we did see a couple of the risk pairs sort of just go back a bit, but if I just show you the charts here, you'll see that the week has from early on, like Monday, especially by Tuesday, we could see that the way the currencies were moving, it wasn't, there were some uniform moves, but it wasn't sort of clear cut whether they were going up or down. And we're waiting for the technical setup now. With that risk on situation, the Aussie sort of just picked itself up off the floor. The equity markets, was down 2.5% yesterday. It's enough to diffuse the downside, but not enough to really give it a move to the top side. Dollar yen is pretty much back to where it's been the whole time after that initial clean out. And there's clear signs you can see here where traders or the market in general doesn't know where the currencies are going. Look at the price action here on euro. There was two support lines there on the downside. It sort of flushed down through them, back up and just sort of whipping about. Whereas looks like sterling's found a bit of fair value around 124.20, and it's just trading sideways. And once again, dollar CAD, once it got up to 136, sort of 30.40, it started sort of just jumping around the place. So to me, this is one of those weeks where you cannot generate the moves. The market will do it. And it generally comes, obviously from the news. The dollar index itself overall, the dollar has picked itself up off the floor. Now, this is a bit of a surprise to me. I thought it would be down here by now, but it's, with the various news and things going on, it's completely sort of diffused the downside. And if anything, it's very happy trading sideways, as is dollar yuan there as well. Now, what can we do with this? Well, there's not a hell of a lot because, once again, if you come back to the news, right, and our momentum and direction is coming from these aspects. There's a few various things coming out. The Federal Reserve caps bank dividend payments after pandemic analysis. Bank stress tests. I mean, that was probably jigged a bit, but that looks like things are okay. And the other thing that you'll see, there's a few cases here. It looks like it's all sort of US based, but there are spikes across the board on the coronavirus. Okay, I know everyone's thinking fake news. It's the forces that be that tell us what's going on. And regardless if it's fake or not, it looks like to me, they are pushing for another wave 2 shutdown. Huge spikes across the board. I think Donald, in his speech the other day, he said, well, let's just slow down the testing. If no one's actually sick, it's like carrying any sort of bug. If you're not sick, well, it shouldn't really matter. And, and to get this second wave happening and get control of their economies in countries, I think all you do is go out and start testing more people, and you find that everyone's probably got it anyway. It's not very uncommon for everyone to catch a common cold, but for some reason, this is taking on new life. So for me, what am I looking at today? Well, if I just bring you back to the main page, I'll just give you a look at this is where I've been sort of seeing the currencies, the direction and everything else put into play. If you're looking with good opportunities, to me, I'm very uncertain where the next move is going to be. And all these pairs, all the major pairs are basically trading sideways. Okay, there's no clear dominating trend at this point. Now, as far as where the next move will come from, we're looking at some of the US numbers, the PCE price index. Usually in normal market conditions, this is a good inflation number that the Fed would look at. Personal spending, well, maybe these give the dollar direction at the end of the week, but we're clutching at straws if we haven't already seen the clear moves. It's been, as I said, it's been one of those weeks where you need to know what's going on or be able to recognize that trading conditions aren't clear and just avoid the sort of high risk markets. All right, so that's sort of what I'll be doing. Don't forget, something could come out of left field as far as the geopolitical situation goes. We know Trump is a ticking time bomb, so that could be something there. Outside of that, once again, just keep an eye on those US equity markets. It's one place to keep an eye on for that risk on, risk off profile. And I had a good question yesterday when we see the equity markets move, do we sort of jump on? No. What you're really looking for is you're looking for support and resistance levels, like trend lines where we get critical mass of traders making trade decisions. Okay, that's what you're looking for. So you need the equity markets to be sort of moving in a very clear direction, probably above 1.5% at this point. And then if you've got the correlation here with trend lines, well, that's a good thing. Now, sterling is trading nicely in the middle of a range here. It's got support and resistance both sides. So to me, that's not a bad idea to be having a look at that as we go through that North American session in particular. All right, guys, have a good trade day. Not the best markets, but, there could be a few diamonds in the rough. Cheers, guys. Have a good one.